Brad Williams, Frugal Finance, stocks, investing in stocks, evaluating stocks. When you buy a stock, you're buying part ownership of a company and an opportunity to partake in its success or failures over time. Choosing an individual stock takes time and forethought. Getting answers to some key questions and making use of some well-established methods of stock evaluation can help you determine if a stock is right for you. Answering key questions, whether you're following up on a stock tip or are already familiar with a company, start by getting answers to important questions about a company's operation and finances. How does the company make money? Are its products or services in demand, and why? How has the company performed in the past? Are talented, experienced managers in charge? Is the company positioned with growth and profitability? How much debt does the company have? All excellent questions, whether you want to invest in a long-term security into a company, or do you want to keep doing your research and evaluating a better, well-managed company? You also want to understand where the company fits within its industry and the risk it faces both as an individual company and as a piece of the broader economy. How's the company's industry doing as a whole? What are the obstacles and challenges the company faces? Does the company face any economic, political, or cultural risk? The good news is that you can find most of the answers to these questions in just a few documents. All companies that trade publicly on national exchanges report earnings to the Securities and Exchange Commission on a quarterly basis in an unaudited filing known as the 10-Q and annually in an audited filing known as the 10-K. These reports include a wealth of information, including a business overview and discussions of risk facing the business, such as supply chain challenges or lawsuits. In addition, income statements found in both the 10-Q and 10-K offer a good starting point for answers to profitability questions. They show a company's sales and revenues, expenses, and before-tax earnings, among other things. The SEC offers pointers on how to read a 10-K or 10-Q. I have videos on those. Check it out on my playlist under Investing. Here's a tip. If you're looking for the 10-Q, 10-K, or other SEC information, you can use the Edgar database. Well, you have to go to the SEC and take a look, but I suggest that you just look under investor relations for the larger companies. You're gonna have to do a little bit of digging. I always go through Google. For example, go to Apple, and I'll just put Apple Investor Relations. If you want the SEC information, there should be a link directly to the SEC information for the company, and it's generally a historic information along with all their other filings. Now, for smaller companies, you may not have that access and you may need to go to the Edgar database, but otherwise, it's a much cleaner approach if you go directly to the company's investor relations site and do your research there. Key valuation ratios, there's hundreds of ratios. We'll just point out 4 here. Because companies differ in size in the number of shares they have issued, you might want to use ratios to compare the value of different stocks. Several key ratios can be derived from a company's earnings reports, and you can easily find many of them using FINRA's Market Data Center. Here are a few ratios commonly used in evaluating stocks. Earnings per share, calculated by dividing a company's total earnings by the number of shares. The company's earnings per share allows you to compare the financial results of companies in different sizes. Earnings per share is one indication of a company's current financial strength. Price to earnings ratio, calculated by dividing the current price of a stock by its earnings per share. The PE ratio is a commonly quoted measure of stock value. In a nutshell, PE tells you how much investors are paying for a dollar of company's earnings. For example, if company A has a PE of 25 and company B has a PE of 20, investors are paying more for each dollar earned by company A than for each dollar earned by company B. Price to sales ratio, calculated by dividing the market capitalization of a company by its revenue. The price to sales ratio doesn't factor in profit, which can be helpful when evaluating companies that haven't yet made a profit. Startup companies, we use a lot of price to sales ratios as a measure or as a relative value to other companies in the sector. Debt to equity ratio, calculated by dividing a company's total liabilities by total shareholder equity, total assets minus total liabilities. The debt to equity ratio allows investors to evaluate a company's leverage and how much it is using debt to fund its operations. Also, understand how these ratios compare to the market as a whole and to a company's particular industry, since there can be significant variations in the average ratio across industries. Stock Research Sources, FINRA's Market Data Center, is a comprehensive, content-rich, free online information resource for retail investors. It features detailed market data, including company profiles, key ratios, and valuation information, and trading data on a wide range of stocks. Another way to learn more about individual stocks is through professional stock research. Some brokerage firms, typically full-service firms, provide research from their own analysts and perhaps from outside sources. You can also find independent research from analysts who aren't affiliated with a brokerage firm, as well as consensus reports that bring together opinions from a variety of analysts. Some of this research is free, while some charge a price. Research provided by FINRA registered broker-dealers is required to include clear, comprehensive, and prominent disclosures of conflicts of interest. And FINRA rules prohibit certain conduct where the conflicts are considered too pronounced to be cured by disclosure. Investment research obtained from other sources may not have similar investor protection in place. For example, stock analysis found on social media or online forums might not disclose if the publisher or promoter of that research has a financial stake in the company or investors taking certain actions. Posts can be used to spread false or misleading information to try to manipulate a stock's price, resulting in real consequences for companies, particularly small or micro-cap companies and investors who trade on that information. At the end of the day, while it's important to evaluate each stock in which you individually invest, it's also important to evaluate it as a part of your overall portfolio. Always remember to consider how an investment in a given stock will fit your overall investment strategy and whether it will help you achieve asset allocation or diversification that you're looking for in your portfolio. Comment if you have any questions related to stock evaluation or investing in general. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.